How's it, YouTube? And welcome to Financial Freedom. In this video, I'm going to show you the debits and the credits in the accounting practice. But sir, what is a debit and what's a credit? Relax, Max. Here, have a look. Debits and credits are in fact financial terms used to show the double-sided entry system of all financial transactions. Hence the accounting term called the double entry system. But I must intervene. You must not get it confused. The debits and credits must not be put in the same category as adding or subtracting. Please forget this type of knowledge. It is not the same as adding or subtracting. Now that I've gotten that out the way, let's get to the nitty-gritty stuff. So from the description that I gave you above, this is now the ultimate golden rule. For every debit, there is a credit. Ring a bell from the past video? If you didn't see the past video, there's a link down in the description. But now let's carry on. I'll say it again. For every debit, there is a credit in the T accounts and in your books. Whoa, sir. What's a T account? Hey, hold your horses, buckaroo. Let's have a look here. The T accounts is the system we use in accounting to help record and track all the debit balances with all the credits. So now that we've got that clear, let's see how T accounts operate. From all the transactions that a business can conclude, we can now see that for every dollar, pound, euro, rand, whatever currency you work in, that the business has spent, it can only be spent on two items, and they are assets and expenses. Sorry, didn't mean to give you a fright by screaming into the mic. But this is also known as the application of funds. On the other side of the coin, for every dollar, pound, euro, rand, again, whatever currency you work in, there has to be a source. So the source of funding had to come from somewhere in order for you to purchase said asset or expense. This is known as the source of funds. Now, my wonderful accountants, this leads you to the ultimate cheat of mastering the basics of accounting. Spoiler alert, here come some acronyms. And once you've learned these acronyms and you live and breathe and understand fully about these acronyms, you can never ever be faulted within terms of the basics of accounting. I think that's enough teasing, so let's get into it. The teasing's over. Right, let's get into the acronyms. So the first set of acronyms that I'm going to teach you is the application of funds. And they are as follows, known as DAX. Now what is DAX exactly? Well, it's made of D, A, and X. Well, kind of Captain Obvious over there. What does DAX stand for? It stands for your debtors or drawings, your assets, and your expenses. Now, what makes DAX so special, and why do I need to learn this acronym? Well, if I quickly draw you a T account over here, if we look at the T account, please mind my ugly drawings. Okay, the key fundamental part that we need to understand within terms of DAX is that on the debit side, the left-hand side over here, everything in terms of a value goes up. So in a DAX account, when you want the value of that account to go up, you put the amount on the left-hand side. If you want the amount of DAX to go down in value, you put it on the right-hand side, otherwise known as the credit side. So for DAX, everything on the left-hand side, you increase in value. Everything on the credit side or the right-hand side of the T account, you decrease in value. So that's DAX out the way. Let's get into the next part. So now we've dealt with the application of funds. So we've got the money and we're spending it on assets and expenses and debtors and whatever. We now move on to the source of funds. So for every time the business transacts to purchase an asset or an expense, they have to get the money from somewhere. And the money has to come from a source. So now, moving to the type of source of funds, the acronym that you have to remember is LIC. Now, what does LIC stand for? Well, it's for liabilities, your income, and your capital or creditors. So, let's do the same thing with that we did for DAX. I'm going to quickly draw us a nice little T account. We go over here. Now, remember, DAX, if we wanted to increase the value, we put it on the debit side. LIC is the complete opposite. If we want to increase the value of an LIC account, we put it on the credit side. So that's where an LIC account will increase in value. If you want to decrease the value of an LIC account, we put the amount on the left-hand side, otherwise known as the debit side. Now that you've got the drawings and how the various acronyms work, let's get into some examples because I'm sure that's what you want.
Our first example is a DAX example. Mr. Smit starts an online t-shirt business and opens up a bank account as Mr. Smith's Tees, otherwise known as MST for now, and transfers $10,000 out of his personal bank account into the business's bank account. Let's see in a DAX overview how this will affect the T accounts. I need you to remember when drawing these accounts, it's going to be affecting the DAX and LIC account. So two accounts that are named DAX and LIC. Now that you've got your drawings of the T accounts and you've got them labeled as DAX and LIC, I need you to remember a little cue that will help you with drawing all of your T accounts. Remember that DAX increases in value on the debit side and decreases in value on the credit side, where LIC is the complete opposite. It decreases on the debit side and increases on the credit side. Now that we've got our accounts drawn up, let's see how this transaction affects these accounts. Referring back to the transaction example, we remember that Mr. Smit transferred $10,000 out of his personal bank account into the business's bank account. So in terms of DAX, we put $10,000, which is increasing the value of the bank, which is increasing the value of an asset, which means it falls under DAX. So therefore, we write under the debit side $10,000 under DAX. Now that we've got DAX sorted, let's go on to LIC. Seeing that it is a contribution from the owner, Mr. Smit, that means it is a capital contribution. And with capital, it falls under LIC. It increases the value of the LIC account, so that means it must go onto the credit side. I need you to remember that even though we are increasing both sides of the T accounts, this is a transaction affecting the business, not Mr. Smit. So by Mr. Smit contributing $10,000, it is increasing the bank's bank account, but also increases the amount of capital being contributed that we are recording from Mr. Smit. Now that that's taken care of, let's see how a DAX detailed account looks like. Under these two T accounts, please write bank and capital. So just like we did for DAX and LIC, we've now got the actual accounts it will be affecting. So bank will increase by $10,000 and capital will also increase by $10,000. So we record this by putting 10,000 Rand on the debit side of bank and 10,000 Rand on the credit side of capital. You see, not so hard after all. But now, let's check ourselves in terms of the accounting equation if we actually balance. Now that we've got the accounting equation up, let's see how it's going to affect it. We remember that the 10,000 Rand is a deposit to the business's current bank account, so it's going to increase the assets by $10,000, and it is a capital contribution from the owner, so it's going to increase on the owner's equity side as well. Now that we've got that sorted, let's see if these two accounts balance. So draw a total account at the bottom. Now that we've got the total column set up, we can now see that assets increases by $10,000. Owner's equity equals $10,000. And what would you know? We balance! Simple, easy. Now let's do an LIC question. The second transaction shows MST purchases t-shirts from a new supplier worth $30,000. The new supplier's name is Mike online, and they allow MST to purchase the t-shirts on credit. So now let's have a look at an LIC general overview. So just like we did in the previous example for DAX, we're going to do the same for LIC. So we have to account for two accounts named DAX and LIC first. Great, account sorted. Let's see how this $30,000 transaction affects DAX and LIC. So the $30,000 is actually trading inventory that we are purchasing. So in terms of DAX, it increases by $30,000 because trading inventory is a DAX account. On the LIC side, it increases in value as well, as we are purchasing the inventory on credit. So creditors' control will increase in value, which is an LIC account. So just like we did for DAX, let's do it for LIC and see a detailed T account. So which accounts are actually affected? So now the question is, which accounts are affected? For DAX, we are going to put trading inventory, and on the credit side for LIC, we are going to put creditors control because the inventory was purchased on credit. Now that we've got the two affected accounts, we will do exactly as we did in the LIC and DAX equation. We will increase trading inventory on the debit side by increasing it by $30,000. And then we go to the creditors control account on the credit side and increase it by $30,000. So now that we've got that sorted with our inventory going up with the $30,000 worth, but our creditors control also going up by $30,000 worth, let us see in the terms of the LIC how it affects the accounting equation. Great, accounting equation sorted. We remember that $30,000 goes under assets because trading inventory is a current asset. But on the other side of the coin, the $30,000 in terms of creditors control increases liabilities on the other side of the accounting equation. Now that we've got those two out of the way, let us draw a total column and see if we balance. I'm pretty sure you clever accountants are about to see assets equals $30,000 and liabilities totals $30,000. And what do we know? We balance again!
And that's it. Debits and credits in the bag. Not so scary after all, is it? Now, I must emphasize, accounting and finance in general is only mastered through practice. So take what I've just taught you and tackle your own textbook questions. But sir, some of the textbook questions aren't that great from my school, sir. They're generic. That's okay. I've got practice questions, and plus I've got cheat sheets that not only comes with practice questions, but comes with the memos and comes with marking guidelines. So everybody wins. Great, sir. Thank you so much. But where do I get it? Like I said in the previous video, which is attached down below, you can contact me and get hold of these cheat sheets at learnwithmrsmit@gmail.com. I will leave the email link in the bio. And there is no excuse. Contact me at that address. I will give you the cheat sheets and I will give you the practice questions, the answer sheets, the memos. Just say again, thank you so much for staying towards the end of this video. I greatly appreciate it. And I would appreciate it even more if you hit that like button, you hit the subscribe button, and you click the notifications bell so that you don't miss any accounting videos from myself. I'm going to be releasing more content, YouTube shorts, TikToks, Instagram reels. I've got it all and it's all coming. So hit the subscribe button, hit the like button, hit the notifications bell, and you won't miss a thing. If you like this type of educational video, please leave a comment down below as well, and leave comments as well that show or that tell what you want from me. Which subjects do you want me to teach in terms of accounting? What do you want me to touch on? Do you like these type of educational videos where I show you the step by step? Leave the comment down below and I will answer accordingly and take it into account. And YouTube, thanks for watching, and I'll see you in the next class.